Hi everyone, this is Dash USDT 4-hour chart, and obviously very bearish price action, very difficult trading opportunities. But with Dash, we are at long-term lower support. And what does that mean? What that means is we have people interested in this particular asset and interested at these levels, but it isn't a clear range. Now, we've been talking about this for a while now, so just quick recap. We've obviously got this upper level which has been supporting the price action historically for quite some time. This is 2025 to September 25, so about a good few months ago. This is $30. $30 has been supporting the price action, and that's pretty much where we are at present. Below that, we have another level at 28, which we have essentially tapped. This is also supporting the price action. This is the middle part of the zone. Now, the bottom part of the zone, which we haven't been down to yet, is made up of this lower level at around $25. And that $25 level, you'll see, lines up with the previous consolidation zone, which we were in at the back end of 2024 and the beginning of 2025, all the way through to the autumn last year. And then we had that breakout and establishing and re-establishing the range which we had previously had bullish price action again back above this $28-30 level. So what this means is we have a selection of levels to choose from where Dash can potentially bottom. But because of course we've broken through the first level at 30 and we've come down to the second level, and given the fact that we're still struggling to get above any of these moving averages and the price action is very muted, we haven't had any of these moves whatsoever, coming down to 26, 25, that seems quite likely. Now, armed with that knowledge, we can now look at this as a trading opportunity, or rather to see where those trading opportunities are. So firstly, this is the 200 MA on the 4-hour, this is the daily 200 MA. And the volatility for longs at this point are making it complicated for a short. So we are looking maybe to capitalize on a long now because we are at support, but we need to be very cautious. We're not entering just yet for long-term positions. Now, this is the low, the local low, 29th of July. The last time we were approaching this low was the 5th of June. We've struggled to recover. We traded this range like so, and now we're here. Now, if you're looking to come in for a long, you really want to come back in with the lowest point we've been in recently, and that is around $28. And this is why there's a saturated order block here. You come in here, you're going to get some liquidity, as you'll see, and then you can decide where you want to trade. Now, the most obvious range at this point is just here in this very narrow area between around 32 and 28, 29, give or take. That would probably be the sort of trade you're looking for. A quick in and out, scalp 28, approaching 30, 32, that's it. Don't try and take profits above where the 200 MA is because it hasn't been won back yet, because there is going to be some liquidity building up at these lows because we are in support. But you're not coming in here at 28 hoping for these higher prices or the next bull run. You're just going to get in and out. That's the trading opportunity. And only when we come back down to this level or arrive at this level at 25 do we start thinking of longer term positions. And our trading analysis of the big picture has helped us stay informed about the probabilities and the sort of trades we should be taking. So this is not a bottoming play. This is a quick in and out based on the liquidity we're getting because we are in this support zone. But we need lower prices for a more larger, longer term position. But that's that.